Introducing Albert Gomez. Albert Gomez is a personal friend of mine. He's been a commercial banker for over 30 years. He worked with banks, Wells Fargo, B of A, and as an independent consultant, and has done a great job with many of our clients, especially on the first round of PPP. There was a lot of clients that just had difficulties really qualifying. Albert, with his banking career, was able to help and facilitate that for many of our clients. So he is just what I call an expert in this area. And because of his background, I felt he was the best to present this segment. So with that, I want to welcome Albert Gomez. Albert, we're going to unmute yourself, or we're going to unmute you. And I want to thank you for sharing your expertise with us in helping us navigate and answering a lot of questions regarding the second round of PPP loans.
Thank you, Javier, for the opportunity. Thank you, Sarah, for setting this up, and looking forward to going over some good information today. So as Javier mentioned, I did spend 17 years in banking, Wells Fargo, B of A, and Wachovia, and then Wachovia became Wells Fargo again. And since then, I went out into the private industry. I've been serving in different positions, from CFO to president of different companies. I've always seen myself in the growth business, so it's been a lot of fun. I can tell you it's very different being a banker than being out in the real world. So all the business owners that are on the line, believe me, I feel you. I know exactly where you are. I've been there the last, 13 years after a 17-year career in banking. So, but we're here to talk today about the SBA PPP second round of loans. So thank you all for participating. Let's go to the next screen, Saida. So just as an overview of what we're going to cover today, I want to go a little bit over the SBA PPP loan history. Then we'll talk a little bit about the first round loan criteria, and why I want to cover that is because those of us that didn't have the opportunity to apply last time for whatever reason, didn't know how, were left out, whatever reason, first round rules still apply for people that are applying for the first time. Then we'll talk about how the second round loan criteria changed. It's gotten easier for some, and others that would qualify in the first round will not qualify in the second round. But we'll go over those details when we get to that section. Then we'll talk about loan forgiveness. If you have a first round loan and you haven't asked for forgiveness, we could talk about that a little bit. We'll then, I'll give you also an SBA application checklist that you can use to prepare, whether first round or second round. And finally, we'll also go over some SBA type of applicants that won't qualify at all. I don't think it's anybody that's on the phone that won't qualify, but we'll go over those. And we're going to leave as much time as possible at the end for questions and answers. So next slide. So March 27th of 2020, the CARES Act was signed. President Trump and the Senate and Congress put this PPP program together with $2 trillion for what they called the Coronavirus Aid Relief and Economic Security Act, CARES Act. And in effect, what they did is they said, U.S. Treasury, SBA, get together through your SBA 7A program and lend up to $10 million to each company that qualifies. And this money will be forgiven if it's used to cover payroll, mortgage interest, rent, and utilities. And we'll go over some of those specifics, but that was a general gist of the program when it started. Well, March 27th, they approve it. April 3rd, they allocate $349 billion for the first round. And guess what? 13 days later, April 16th, the funds were exhausted. As many of you may have seen, a lot of big companies applied, big corporations applied. And the reason is that they had given a 500 employee limit, and we'll look at that in a second, 500 employee limit, but for restaurants, it was 500 per location. And so big companies were able to apply. They exhausted the funds, and a lot of companies that really needed the money didn't get in. And it was a sad moment for a couple of weeks. And next slide, Zaida. So soon thereafter, about the 22nd of April, the SBA approved, or the government approved, another $320 billion for this same type of loans, PPP loans. What's interesting is that this time, the $320 billion were not exhausted. There was well over 100 billion, if I remember correctly, about 120 billion that is potentially still there. So not all of that money was used up. The deadline for applying for that program was August 8th. And I remember, gosh, I helped dozens of clients get approved for the first PPP loan. I remember a couple of them that maybe were a week before the 8th of August, call it August 1st, looking at their application for the first time. So the program stopped August 8th. And since then, we haven't had another PPP. The funds, again, were not exhausted. December 27th of 2020, the economy continued in a horrible way. So this time they've approved $285 billion under the COVID-19 relief deal that was signed by the president, Congress, and so forth. So January 11th, which is Monday, the first round of applications started being accepted by community banks and small lenders. Yesterday, the 13th, and that's, I'm sorry, for the first round. So if anybody that didn't apply for first loan some time ago, during last year, and they wanted to apply for the first time, those applications were started there with community banks and small lenders. Why is that? Well, the government allocated a certain amount of money the first round, and I think in the second round as well, about $50 billion for these smaller banks to be able to help out micro companies and those in minority neighborhoods that are typically underserved. So that's the intent and why they want to give these folks a little bit of a lead time, if you will, a handicap, if you golf is the term that we would use there. So on the 13th, yesterday, anybody who wanted to start applying for the second round, again, through community banks and small lenders, was able to start that process. All of the lenders are expected to be announced soon when they can start accepting applications. And if you just ask me what I think, it might be middle to late next week when all the other lenders will be able to start processing applications. I will let you know that I work with a lot of different banks to be able to get all the clients that the money that they needed. So the thing is that some of the banks said that the SBA again had trouble like they did the first time and stopped accepting applications temporarily. That does not mean that the banks are not processing them. There's a lot of underwriting that the banks have to do. They have to underwrite the loan themselves. Once they feel that it'll get approved by the SBA, then they submit it to the SBA for what's called an approval or SBA loan number. Once you have that SBA approval or loan number, it's a matter of time before you get the money, but you'll get the money. That's like your reservation that you're going to get the money. Let's go on to the next screen, Zaida. So for first-time borrowers, the requirements were that you had to have 500 employees or less. You must have been in business on the 15th of February of 2020 to qualify. So if you started in March of 2020, that wouldn't work, but anytime on or before the 15th of 2020, you would qualify. Now, the loan amount that they were offering for first-time borrowers the first time was 2.5 times average monthly payroll. And again, the maximum loan amount would be $10 million per borrower. Second-time borrowers, this is the new second round PPP. And this applies only to those who already have a first loan. If you don't have a first loan, you are still a first-time borrower, even though this is what we're calling the second round of PPP loans. If that's confusing, ask a question in the chat, and I'll try to clarify later. But if you did not get a loan last time. If you today do not have an SBA PPP loan, you're a first-time borrower, you are still going off of these, how can I say it, these criteria. For second-time borrowers, you are now looking at 300 employees or less, right? So what the government is trying to do is limit the size of the companies that get these monies. So 300 employees or less versus 500 before. And, or there's an exception, and we'll look at that in more detail, if you have a NAICS code of 72 or 51. What that means in English, the industry code is for restaurants or those in the food services industry, and also for theaters, movie theaters, performing arts studios, and that type of thing. And that's a 51 NAICS that we see there. The caveat, if you are getting a second loan this time, is that you also have to have spent all of the money that you got in the first loan, or that by the time you get funded on the second loan, that you spend it all. Now, the loan amount for most companies, again, is the same, 2.5 times the average monthly payroll. This time, though, the maximum loan is $2 million. Last time it was 10 million, this time it's 2 million, and that's per borrower. Next slide. So, second-time borrowers, if you are in the restaurant business, the NAICS code 72 or 52 that we spoke about, those are food service companies and performing arts, theaters, and so forth. Instead of getting 2.5 times your average monthly payroll as a loan amount, you'll get 3.5 times. So let's assume that I was a restaurant and I got 2.5 months of payroll during the first loan period. So I already have 2.5 times, 2.5 months of my payroll as a loan. If I get a new loan, now I get 3.5 times. So in effect, the government is giving me 2.5 plus 3.5. That's 6 months of payroll as a loan. And these loans, again, can be forgiven. Pretty much every company that I worked with, I ensure when we're applying that they're able to document that they have these expenses. We walk you through how to use the money so that you're 100% sure that you'll get forgiven. So in effect, it's been 11 months. How long has it been since the pandemic started? We'll call it March through December. What's that, 8 months, 10 months? And the government is saying for the harder hit companies that were forced to shut down completely or drastically, they're giving them up to 6 months. The companies that, in all of the class codes, if you got a loan the first time, that's still 2.5 months. You get another 2.5 months now, 5 months, it's still very good. So that's a way to look at this. So second round applicants, however, have to show quarterly revenues dropped 25% or more in 2020 versus 2019. I was just working with a client yesterday that first quarter was unaffected because the pandemic started about February 15th, maybe March 15th officially. So their first quarter wasn't bad. Second quarter actually went up. They were up like 40%. They were hitting it out of the ballpark. Third quarter, things started going down 18%, but 18% isn't enough to qualify because here you need to have shown that your sales dropped 25%. Well, the fourth quarter, their sales dropped 48%. So what we're going to do with this client is show that the quarterly sales for the fourth quarter of 2020 compared to the fourth quarter of 2019 were 48% lower. And so that's how we're showing that they qualify for this loan. The other thing is businesses can apply for second loan whether or not they have requested forgiveness for the first loan. A lot of companies have not requested forgiveness, maybe because banks are behind. Some banks weren't even accepting loan forgiveness applications for a while. But so if you haven't asked for forgiveness, don't think that, oh, geez, I can't apply for this new loan. Apply anyway. And if you need help, we'll find you help to get that loan forgiven. Economic injury disaster loan. This is something new for the second round too. Many companies, in addition to the PPP program, applied for the economic injury disaster loan, which as soon as you applied, they gave companies an immediate up to $10,000 loan. And then they decided how much they would give you. And let's say they gave you 100,000. Well, let's say you got an economic injury disaster loan for 100,000 the first time. When you got your $500,000, I'm making up numbers, of course. When you got your $500,000 PPP loan the first time, the government was reducing your new $500,000 PPP loan by the 100,000 they'd already given you for the economic injury disaster loan. Well, with this new program, the government or the SBA will reimburse that, in my example, 100,000. So no longer are economic injury disaster loans an issue. They will be forgiven. Next slide, Zaida. The other thing that we have here is that payroll costs were loosened up. It started as you had to have a higher amount of payroll costs and a very low amount for other allowable expenses. And so now, even with the first round of PPP, you had 60% of the funds that you borrowed had to be used in salaries and wages, commissions or tips. You could pay for group health insurance, retirement plan contributions, and state and local payroll taxes, not federal taxes, but that's all payroll. So 60% of your loan proceeds had to have been used on payroll costs for you to qualify for forgiveness. Well, the other 40% could have been used on rent, mortgage interest, and utilities, provided that these were in place on or before February 15th of 2020. Next slide. With the second round of the PPP, you see the list expanded quite a bit. So payroll-related expenses are not only covered, but there are other expenses that are covered. So we have rent, mortgage interest, utilities, group life insurance, vision, dental insurance, disability insurance. So all these other insurances are now deductible. For the non-payroll operating expenses, so this is still for the 60%. The payroll-related expenses still are for the 60%. The non-payroll operating expenses that you could use for the other 40% of the loan have been expanded as well. If you need software to manage your business, if there was property damage because of any riots that took place, a lot of places had that issue. If there are any supplier costs that you have, we also have workers' personal protective equipment, masks, gloves. You have to put up plastic barriers in your restaurant, whatever it is that you needed. And more broadly, COVID-19 modification expenses. In the case of restaurants, some restaurants were encouraged to go outdoors. Well, it wasn't cheap. A lot of restaurants invested a lot of money to serve their clients outdoors. And then recently, they were told you can't even serve clients outdoors. So these expenses can be covered by the loan proceeds and fully deductible, provided, again, that they fall within the 40% of the total loan amount. Next slide. Hello, next slide. There we go. Okay, so talking about loan forgiveness. Well, for the first loan, we had to maintain full-time equivalent headcount. What does that mean? If I have an employee that works 40 hours, that's one full-time equivalent. Let's say I have two employees that work part-time, 20 hours each. Well, even though those are two bodies, two people, it's one full-time equivalent, because when you measure it as 40 hours of work, that only counts as one. So what we had to do with the loan or approve for forgiveness on the first loan was that if we had, let's say, 10 employees in 2019, that we had 10 employees in 2020. That was the purpose of the PPP loan, Paycheck Protection Program. What the government wanted to do is encourage companies to continue having their staff as employees rather than sending everybody to the unemployment lines. And obviously hoping that we turn this pandemic around quickly so that by the time the funds ran out, we'd be back up and running. That's debatable at this moment, but that's why we have another set of funds. But let's say that we had two less employees, but those 2 less employees worked as many hours as the 10 employees the prior year. You still have a full-time equivalent. How do you do that? Well, when you work overtime, let's say an employee that works 60 hours, that's 1.5 employees. So you could see really quick how you could show that you had the same full-time equivalent. A lot of people, because they were receiving nice unemployment benefits, chose not to go to work. A lot of them were making more money by staying home than by going to work. So a lot of companies had trouble keeping the same amount of employees. So again, the way they're measuring it is full-time employee equivalent. The SBA will reduce the loan forgiveness amount by the proportion of reduction of full-time employees. So let's say, again, you had 10 employees in 2019, and in terms of full-time equivalent, 40 hours a week per employee, and you only had, let's say, 8 employees during 2020. So that's a 20% decrease in employees. So the loan amount that you received from the first PPP round would then be reduced by that 20% that you reduced your full-time equivalent employees by. In other words, or as an example, if you were given a $100,000 loan and you had 10 employees in 2019, in 2020 you only had 8, and again, we're talking about full-time employee equivalent, right? Then the government would forgive $80,000 of the loan, but not that $20,000 or 20% of that $100,000 loan. Now, another criteria that they had for loan forgiveness was that at least 75% of employee salaries and wages had to be maintained. So it's tough in rough economic times to keep people's salaries. So if somebody was making, just to use round numbers, $10 an hour, and you drop them to $7, well, that's 30% reduction. So in order to keep this, you had to pay them $750 or more to not get dinged for this. And so there again, there was this requirement that you don't reduce employee salaries by 25% or less. And that could be achieved not with base salary, but it could also be achieved with somebody that was working 40 hours and all of a sudden is working 26, right? Then you drop them more than 25%. And so that's how we would measure this. But if you have specific questions on this, we can go over it. I know it's a little bit complex, but in general, if you reduce the salary and wages more than 25%, they would dock you again by the amount of that reduction. Next slide, Zaida. So there was also a caveat that, let's say that you drop 20% of employees, you started with 10, you only needed 4 because there was no business, and all of a sudden by December 31st, you were back up to 10 employees, they would not reduce the amount of forgiveness. So that started as June 30th and then was extended to December 31st to rehire the employees that you had before. And mind you, there are exceptions to this. So let's say that you had 10 employees, you went down to 4, and by December 30th, you wanted to hire those other 6, you offered them work. But 3 of them said, thank you, but no thank you. I make more money staying home, and I'd rather just be here with my children, or I'm scared to go back to work because of the pandemic. So you try to hire them, and if you can show that you extended them an offer and they didn't return, that's as if you had hired them. So again, if there are questions on that, we can look at it more carefully. But the idea was that you rehire these employees by the end of the year, or at least offered them their position back by the end of the year. Now, fast forward to December 2020, or December 27, 2020, loans of $150,000 or less may now use a simple verification form for forgiveness. What does that mean? Well, if you felt that the numbers I was going through on these previous two slides were a little bit difficult, we'll do those calculations for you. We could help you with that. But if you had a loan of $150,000 or less, you don't have to go through those calculations. There's a simple form that you fill out for forgiveness, and you verify that you use the monies for the appropriate or approved uses. You sign it, and they will forgive the loan. So $250,000 or less, that applies to. Anything higher than that, we need to go through those little numbers that we talked about earlier. Next slide, Zaida. So pre-COVID-19 full-time employee equivalents. One of the things that the SBA PPP loan provided initially was that they were going to give you 2.5 months of payroll as a loan, but you had to use it in the first 8 weeks. Well, guess what? There was a beautiful plan to reopen the economy, and Newsom here in California had a whole plan of when phase 1 was going to reopen, and phase 2 and 3 and 4, and all of that went away when the pandemic started again. Well, those 8 weeks weren't enough, and people, I guess, wrote their congressman, and Congress eased up and said, okay, I hear you, and you're right. It was 8 weeks from the day that you got your loan. If you hadn't used the money by then it wasn't deductible. Well, they gave a 24-week period. And so that 24-week period was changed, and we'll talk about that next. But with the new loan, it was changed to where it's not 24 weeks from the day you got the loan. With this second round of loans, you can choose when that 24-week period starts and ends. So that's a good thing. But going back to how you calculated, whether it's for the first loan or for the second loan, how much of a loan you'll get, you can look at average full-time employees and their compensation between February 15th of 2019 and June 30th. So if you do an average there per month, then you multiply that average by 2.5, that's what you would get in a loan. The other thing that you could do is monthly full-time employees from January 1st of 2020 to February 29th of 2020. Well, that's 2 months. So you could take that 2-month average and say, okay, that's what I'll use to calculate my 2.5 months. Alternatively, I've had quite a few other clients use a January 1st, 2020, and I'm sorry, this last one, forgive me, this last one at the bottom, that's a typo. Like Javier said, we're stuck on 2020. The January 1st, 2020 to December 31st, 2020 is actually January 1st to December 31st, 2021. So we'll correct, 2019. Now I've really destroyed it. 2019, the year before the pandemic happened, 2019, if you just take the average monthly payroll for that whole year, then you could use that at 2.5 times to calculate the loan amount. So 2019, not 2020 as it says here on the screen. Next slide, Zaida. So what happens if you don't get forgiven? You submit your application, maybe use the money for other purposes other than what the government prescribed that you use them for. What happens if none of your loan gets forgiven? Well, it'll become a 5-year term loan, and the interest rate is only 1%. So not a bad loan. I mean, not something you could get from the bank. These days, banks aren't even lending. But even if they did, to get a 1% interest rate for 5 years, not going to happen. So great loan regardless. Next slide. Ineligible PPP applicants. There are some companies that are not eligible. For example, companies that were not in business before February 15th of 2020. Publicly traded companies, like we saw some apply for the first round, those aren't eligible. Companies that are eligible for the shuttered venue operator grants, and those are other programs, sub-programs under the PPP program for certain sectors that are hit harder. So if you qualify for shuttered venue operators grant, you know what it is. So if you qualify for that, you do not also qualify for a PPP loan. Companies involved in political and lobbying activities. Thank God, right? We don't want to use these monies to lobby or influence politicians to do certain things. Although these days we won't even broach that subject, right? Companies affiliated with the People's Republic of China, a special administrative region of Hong Kong, or the special administrative region of Macau. So these are applicants that will not qualify. And what it means is if your company is domiciled there, you have a shareholder of 20% or more that either lives in these regions or, well, typically lives out in those regions, or your company is owned by an entity that is out of these regions, 20% or more, then you don't qualify. Next slide. So finally, what I thought I'd do for those of you that are interested is give you a application checklist. So there's an SBA application, whether it's the first round or second round application, and you could get that at the SBA.gov website. A lot of banks have them too, but perhaps we could prepare a package and distribute it through Zyra if that's appropriate. But SBA application, there's a loan calculation worksheet. Most banks use a universal calculation worksheet, and we have some that we can, again, forward to if you're interested. But basically, it'll go through the same calculation that we did. Let's say you take your 2019 payroll for the year and divide it by 12, and then multiply by 2.5 is basically what these do. Payroll expense documentation, what you'll need to prove that you qualify. For 2019, there's a year-end payroll summary report that a lot of your payroll companies provide. And those of you that work with staffing companies or human capital management companies, also known as PEOs, professional employee organizations, where you lease the staff from them. They're actually employees under your direction, your management control, but another company gives them their paycheck. You can get a summary report from them. The other thing that you would get if you do have payroll directly is your 2019 940s, 941s, DE9s. And one of the things that got a little bit looser this time, the first round depended on which bank you were applying through. A lot of them did not allow 1099 employees. I'll give you an example. If there's a restaurant that had, let's say, servers and bartenders and so forth, all of those were employees, but sometimes they have musicians, a trio or mariachi or something like that. And these artists don't want to be on your payroll. They don't want any deductions, so they ask you to pay them on a 1099. Well, a lot of banks had trouble getting those 1099s approved before. Guess what? Second round, we can get those through. The other thing that you would have to prepare if you're going to deduct these expenses is healthcare. Let's say you have a Kaiser plan or dental, vision, life insurance, they send you an invoice every month. And so if you have those to prove that you're paying it, that's what we would need. Always need a California driver's license. They need that to identify you. And then for the company formation documents, if you're a corporation, articles of incorporation. If you are an LLC, articles of organization. If, again, corporations would have corporate bylaws and LLCs would have operating agreements. If you're a fictitious business name or a DBA, then obviously get us a fictitious business name statement. And finally, the 2019 federal tax returns. And typically, this is what you need to apply. You can go through your bank, or typically you can do it online, however you'd like. Let's go to the next screen, Lida. What I'd like to do at this point is open it up for questions. I'm sure that there's a lot of material that we covered. It was very quick. I was asked to do this in a very concise manner. So if you do have questions, I'm happy to entertain those at this time.
Hi, Albert. So I did advise everyone in the webinar that if they had any questions, to feel free to send them over on the chat box.
Yes.
We have one question, and it is, for the loan forgiveness, can we utilize the 80 hours we paid employees as part of the COVID pay for those who were exposed or positive?
Okay, and repeat that question. Can you use the 80 hours?
Yes.
And I lost you after that. For those that were exposed?
For the loan forgiveness, can we utilize the 80 hours we paid employees as part of the COVID pay for those who were exposed or positive?
Okay, so you're saying like if they were sent home because they had COVID, right?
Yes.
And you paid them out of the loan proceeds? Is that what the question is?
Yes, just regular pay.
Yes, no, absolutely. I mean, that's payroll. So whether they were working with you or not, yeah, that's payroll. And so, yes, you can get that deducted or used for forgiveness.
Another question is there a deadline for the loan forgiveness for the second round?
Typically it's 6 months after your 8-week period ended, and it started for the first round anyway. Let's talk about the first round because I'm sure the second round will change. So the first round was to be 6 months after the loan was disbursed, or December 31st of 2020, whichever was later. All of that has fallen through the cracks and been amended. What I would say to you is let's get it done now, all right? Just get it done as quickly as you can. Most companies, and certainly every one of the companies or the clients that I helped get their loans during the first round, already have the documentation. It's the same documentation you submitted to get approved or that you use to calculate the amount of the loan up front. So you have the documentation. It would just take somebody to crunch those numbers really quick to see if there was a reduction in pay, reduction in hours, reduction in full-time employees, and submit it. And that again is for loans of over $150,000. If it's less than that, it's a single one page. And I haven't seen that single one page, although I've heard a lot about it. As soon as I get it, I can make it available to Zyda, so you can send out to people if they need it.
Sounds good, Albert. One question, on one of the PowerPoints, there was information on the simple verification form.
Yes.
Where can they receive that form, and can they file that direct?
Okay, that's exactly the form that I was telling you about that I'll get to as soon as I see it, because I haven't seen it, although I've heard a lot about it. I've asked a lot of my banker partners if they have it, and they certainly have the second round application, because I've seen that and I have that, but not that simple verification form. But believe me, I will continue to look for it, and I'll get it to you as soon as I have it.
Great, thank you so much. Any other questions? Feel free to leave them in the chat. I know many are asking for the PowerPoint presentation via PDF. I can go ahead and email that over Per your request, just go ahead and send me an email so that I can get you this information. And as previously mentioned, this is going to be uploaded into YouTube for you to watch later.
Now, Zaida, the only change I would make is that to that one slide where I said it was 2019 versus 2020. But I think we can do that very quickly and then send out the presentation to everybody.
Yes, yes, definitely change the date on that since it's very, very important.
Mm-hmm.
Thank you so much, Albert. Javier, do you have any other questions?
I think we have one more question. Go ahead, Zaida.
One more question, or actually yes. two more. So the last two. First question, how about a corporation that is suspended by the SOS? Can they qualify?
Okay, so here's the deal, right? SOS, Secretary of State. I like suspensions by the Secretary of State because you just have to file your statement of information, right? It costs $25. You could go online, and if you don't know where, go to California Secretary of State. And if you just type that in Google, it'll come up, and then it'll say business searches, right? So business searches is where, and there you'll see you can look up your corporation, and then it'll give you an option to file your statement of information. Most Secretary of State, how could I say it, suspensions happen because every 2 years corporations are required to update them, and a lot of people don't. So that's very simple, and it's very quick. And if you have that issue, I suggest you do it now. What that'll stop you on sometimes is on the approval side and sometimes on the funding side. So some lenders may approve you and say, hey, get this fixed before I fund you, because the lender has to approve you. Then they submit to the SBA for a loan number. And during that time, it could be a week or two. Actually, it wasn't that long last time. So let's say a week or so. Hopefully you get that done. The problem with the Secretary of State is that they sometimes are slow, and with pandemic and everything, it slowed the entire world. Typically every Wednesday, the Secretary of State would refresh their page, but sometimes it takes a couple weeks to refresh their page, and most lenders want to see that the Secretary of State's website says that they're in good standing. So I would make that a priority. Again, it's $25. You could do it online, and I would do that immediately, even before doing anything else. Don't let that stop you from applying if you haven't applied, but know that you got to do that and take care of it as quickly as you can.
Okay, great. Last question, how many 2020 quarters versus 2019 quarters must be submitted in the application for the second PPP?
Okay. Really, the criteria for qualifying for a loan for the second, we'll call it the second round, is the same as the first. So what you have to determine is how many, what your average payroll is, and then that determines your loan amount. So you don't really have to submit any quarters of payroll other than that. If you're talking about the sales comparison, that sales dropped in 2020 versus 2019, you can do just one. So if you say, as a matter of fact, on the new application, it tells you, give me the reference of which quarter. For example, first quarter of 2020 or third quarter of 2020. And if you have the third quarter of 2020 where your sales dropped compared to 2019, then you have to put both of those amounts. So you say, let's assume that I'm this company and I'm going to use the third quarter. The example I gave earlier, 2 of the quarters were good and higher, and one of them, the third quarter, wasn't low enough to qualify. The reduction in sales wasn't high enough. So I didn't have to give 3 quarters. I only gave 1 quarter. That was a fourth quarter. So on the application, I put fourth quarter 2020 versus fourth quarter 2019. And then I said in 2020, we had, let's just make up numbers, 1 million in sales. And in 2020, I had $1.5 million in sales for those 3 months. So there they could see the drop in sales. So 1/4 is all you have to prove that your sales dropped 25% or more to qualify for the second round.
Great, thank you so much. And anyone interested in getting Albert's contact, his contact is below. Take a screenshot. You're more than welcome to get his information for anything else. And we'll leave that up for a few more seconds.
Okay, I want to thank you, Albert. You know, if we had a crowd here, you'd have a standing ovation here, and I'm sure you do.
Thank you.
You did a great job. Thank you for just, taking us through this whole process. It was very thorough. So for those that are on this call, what I want to do is just encourage you, contact Albert. He's got the information in terms of this loan. If you have questions, contact us. Check us out on Facebook, on YouTube. As I said, this information will be there. Very valuable information. So we're here, we've been dedicated to assisting you, our clients and our partners through this difficult time in our country. And like I said earlier, we're in a season, and the season is going to be one that I think a lot of us are going to have to buckle our seats, but we will get through it. The dollar still says, last I read, in God we trust, and I'm hoping that everybody understands that and maybe pick up $1 the next day or two and kind of think about why it was there. So we don't trust in the dollar, we trust in God. So many blessings to everyone. Thank you, Albert, again. Thank you, Saida, for a great job again. And thank you guys for joining us. We look forward to seeing you next week at our webinar on the latest changes in the labor law. Bye for now.
Thank you, everyone, for your time.